Welcome back to Smart Stock Sam, where we cut through Wall Street's noise and hand you the clearest picture possible. Today, we are diving deep into one of the most controversial, most exciting, and most misunderstood stocks on the entire market right now, Palantir Technologies. And before we even get into the charts and the numbers, let me just say this. Palantir just landed another major defense deal that most people are sleeping on, and by the end of this video, I'm going to give you next week's exact price targets and a trade setup you can actually use. If that sounds like something you need, stay locked in, because this one is going to be good. I want you to think about for a second. What would it take for a software company, not a rocket company, not a defense contractor, but a software company, to become a permanent locked-in line item inside the United States Pentagon budget? What would it take for that same company to also get tapped to help build a $185 billion missile shield? And then, on top of all of that, what if that company's commercial business was growing so fast that it was absolutely destroying every single benchmark the analyst community uses to measure elite performance? Now, what if I told you that despite all of that, the stock is down nearly 20% this year, and Wall Street is screaming, sell? Does that sound like a catastrophe, or does that sound like a once-in-a-cycle opportunity hiding in plain sight? That is the exact question we are answering today, and the answer might genuinely surprise you. Let's start with the big picture, because right now Palantir is living in two completely opposite worlds simultaneously, and understanding that tension is everything. On one side, you have the fundamental signal, and it is deafeningly loud. We are talking about commercial revenue acceleration that is frankly unprecedented for a company of this size, alongside military contracts that have officially graduated from pilot programs to permanent government fixtures. On the other side, you have the valuation tension. We are looking at a price-to-earnings ratio of 225.8 times. Let that sink in. 225 times earnings. That leaves exactly zero room for error. If CEO Alex Karp misses even a single quarter, the market will be absolutely ruthless. And then caught right in the middle of those two worlds, you have the technical noise, a 19.5% year-to-date decline that on the surface looks terrifying, but when you peel back the layers, might actually be the sound of a rare strategic entry window opening up. Now let's zoom out on price for a second, because context is everything here. Yes, the last 5 days have been rough, down about 5%. Yes, year to date, we are sitting in a sea of red at negative 19.5%. But pull the lens all the way back to the trailing 12 months, and Palantir is still up a staggering 66%. The current price is sitting around $143. So the question you have to ask yourself is this: is this a healthy correction after one of the most explosive stock runs in recent memory? Or is this the beginning of something much more serious? To answer that honestly, we need to look past the price and straight into the financial engine underneath it. And that engine, I'm going to call it the fortress, is genuinely impressive. Palantir is currently sitting on $7.2 billion in cash and short-term treasuries. They are not just surviving, they are armed to the teeth. Fourth quarter 2025 revenue came in at $1.41 billion, which is a 70% increase year over year. But the number that really made me stop in my tracks is the 137% acceleration in United States commercial revenue. 137%. They are finally proving, definitively, that they can dominate the private sector, not just the Pentagon. Now, their Rule of 40 score sits at 127%. The gold standard for elite software companies is 40%. They nearly tripled it. But here is the uncomfortable truth. Despite all of that, the premium is almost impossible to justify at face value. Trading at 47 times sales when the software industry average is 3.72 times? That is a 1,200% premium over their peers. Their PEG ratio of 2.92 tells you that you are paying a very steep price for every single unit of growth. This is the reason the stock is so violently volatile. The market is pricing in absolute perfection at every turn. So, what is the so-called smart money doing? Let's look at the institutional landscape. Roughly 45 to 58% of the float is held by over 3,100 institutions. The heavyweights, Vanguard with 213 million shares, BlackRock, State Street, they are still anchored in. They are not day trading this, but we are seeing tactical rebalancing happening underneath the surface. Elevatus Wealth Management, for example, recently slashed their position by a jaw-dropping 71.3%. When you see institutional money trimming that aggressively, it almost always means one of two things. They are locking in profits, or they expect a better entry point somewhere lower. Neither of those is necessarily bearish on the long-term thesis, but it is worth watching very closely. And then there is the insider story, which is the part that generates the most headlines and, honestly, the most misplaced panic. Over the last 3 months, insiders have sold over 1 million shares, totaling approximately $140 million. CEO Alex Karp sold around $70 million worth. Co-founder Stephen Cohen sold nearly the same. Now, I know exactly what the comment section is going to say. They're jumping ship. But let's be real here. After a multi-year, multi-100% run-up, founders diversifying their personal wealth is completely normal and expected. It does not mean the company is in distress. What it does create, however, is a headline risk that the bears absolutely love to weaponize. And right now, with sentiment already fragile, that matters. Now, here is where the long-term bull thesis gets genuinely exciting, because this is the stuff that you will not hear talked about properly anywhere else. Palantir's Maven AI system has officially transitioned from a pilot program to a Pentagon Program of Record. In government speak, that is as permanent as it gets. It means Palantir is now a locked-in, multi-service line item in the United States defense budget for the foreseeable future. On top of that, they have been selected as a core developer for the $185 billion Golden Dome missile shield project alongside Anduril. This is not just a contract. This is a multi-billion-dollar revenue pipeline stretching out for the next decade. Layer in the expanding NVIDIA partnership, and you start to see the bigger picture forming. Palantir is quietly positioning itself as the default operating layer for AI across both government and enterprise. Ask yourself, what happens to a company like that in 5 years if artificial intelligence becomes as foundational to global infrastructure as cloud computing did a decade ago? What happens to that stock? But here is the thing. Even a missile shield cannot protect a stock from a global macro meltdown, and right now, the macro environment is genuinely brutal for high multiple tech names. The Israel-Iran conflict has sent Brent crude north of $110 a barrel, and when oil spikes like that, risk tolerance for expensive growth stocks evaporates almost overnight. Investors pull money out of the pay-for-perfection names first and rotate into energy and safety. We are also seeing regulatory friction picking up steam. The UK's Financial Conduct Authority contract is igniting serious debates about data monopolies. New York City Health and Hospitals opted not to renew a major contract amid activist pressure. None of these are company killers on their own, but together they create a negative PR loop that makes institutions hesitate before adding exposure. And hesitation in a technical breakdown environment has a tendency to snowball. Speaking of technicals, if you are a chartist right now, this chart is genuinely painful to look at. We are in a strong sell phase. The stock is trading well below its 50-day moving average of $152.50 and even below the 200-day moving average, ranging up to $163.58. When you are below both of those levels, the trend is your enemy. Full stop. The RSI is sitting at 34.37, which means we are approaching oversold territory, but we are not quite there yet. The MACD is at negative 2.94, maintaining a hard sell signal. However, and this is the part I find genuinely interesting, look at the recent doji formations and spinning top candles starting to form. These candle patterns represent extreme market indecision. The bears are showing signs of exhaustion. The stock is desperately trying to find a floor. And when bears get tired, that is historically when the most violent reversals begin. Now let's talk about the hidden mechanic that most retail investors completely miss, and this one is critical for your trade setup. Short interest is low at 2.38%, so do not count on a short squeeze to bail you out. The days to cover ratio is only 1.29, but look at the dark pool activity. Between 42 and 46% of total volume is happening off-exchange, which signals heavy institutional hedging. Now look at the options chain expiring April 2nd. There is massive put protection clustered at $152, 50 cents, and $160. These act like gravitational pull to the downside. Call resistance is stacked at $150 and $155, acting as a hard ceiling. The options market is essentially pinning the stock down right around this $140 range. Until that pin expires or shifts, the path of least resistance remains sideways to down. So, what is the stock actually worth, according to the people whose job it is to model this? Here is where it gets fascinating. At $143, we are sitting significantly below the 12-month consensus price target of $195 to $198. But the high-conviction bulls, Wedbush, Citi, are looking at target ranges of $230 to $260. That is nearly an 80% upside gap from where we trade today. The market is currently pricing Palantir like a company in crisis. The analysts are pricing it like the future backbone of global AI infrastructure. One of them is going to be spectacularly right. Now, let's build your actual price map. Immediate ceiling resistance sits at $152.50 to $155. That is the 50-day moving average zone we need to reclaim first before we can even talk about recovery. Major resistance above that is at $163.58. On the downside, immediate support is at $141.56. If that level breaks convincingly, the next target zone is the breakout area between $136 and $138. And if we see a truly catastrophic macro event, the ironclad floor, the 61.8% Fibonacci retracement, is sitting at $120.12. That is the line in the sand. Based on all of this, my preferred strategy right now is a laddered entry. Do not go all in at once. The technical weakness is too real to ignore. I am watching an accumulation zone between $136 and $141. Why that range specifically? Because $136.82 represents the perfect 50% Fibonacci retracement level, a historically reliable psychological floor for Palantir during macro-driven pullbacks. The approach I am watching: start a partial position around $141, add at $138.50, and complete the position at $136 if we get there. This structure lowers your cost basis, protects you from the short-term volatility, and positions you to capitalize when the trend eventually reverses. When you zoom all the way out and look at everything we have covered today, the dichotomy actually resolves itself quite clearly. The noise, the oil spike, the macro fear, the options manipulation, the insider selling headlines is loud, and it is exactly what is driving the price down right now. But the signal, 137% commercial growth, a permanent Pentagon AI contract, a Golden Dome missile shield partnership, $7.2 billion in cash. That signal is screaming something very different. It is screaming that Palantir is the premier AI infrastructure provider on the planet. And this current fear is not a fundamental deterioration. It is a localized liquidity event, a technical window, the kind of setup that only appears a handful of times in a company's life cycle and only rewards the people disciplined enough to wait for it. Before we get to the final verdict, I want to be completely transparent with you because this is important. Everything discussed in this video is strictly for educational and informational purposes only. Nothing here is personalized financial advice, and nothing here constitutes a recommendation to buy or sell any security. Investing involves real risk, including the potential loss of your entire principal. Always do your own due diligence and always consult with a qualified financial advisor before making any investment decisions. Markets can and do move in ways that defy even the most rigorous analysis. With that said, here is the final verdict. Short term, stay cautious. Do not chase intraday bounces. Wait for a confirmed daily close above the 50-day moving average at $152.50 before you treat the trend as reversed. Long term, the posture is accumulate. Be strategic and aggressive on technical dips into that $136 to $140 zone. Palantir remains the undisputed leader in enterprise and defense AI. Use this volatility as your discounted entry window before the next fundamental breakout arrives. The signal is always quieter than the noise. You just have to know how to listen. Now I want to hear from you, and this is a genuine question, not just a throwaway. Do you think Palantir hits $200 before it tests $120? Drop your answer in the comments below, because I read every single one, and the debate down there is always better than anything on financial Twitter. If this video gave you clarity on a name you have been watching, do me a favor. Hit that like button. It genuinely helps more people find this content. Share it with someone who needs to see the full picture on Palantir right now. And if you are not subscribed to Smart Stock Sam yet, what are you waiting for? Hit subscribe and turn on notifications, because in a market this volatile, you cannot afford to miss the next one. I will see you in the next video.